Welcome back everyone to another market review, and today we're going to be reviewing the Japanese yen dollar. And as you guys know, today was the FOMC day. Interest rates were lowered by 50 basis points, and I didn't really like NASDAQ going in. Even in the morning, we didn't have really favorable price action. So on days like these, I always recommend you guys check out the currencies, specifically Japanese yen. It's very volatile. It's going to provide you with really clean setups, to where on those days where if you see NASDAQ chopping around, especially around that midnight opening price, it might just be better to head over here instead of being on the US equities. Now, going into this day, here we're on the daily chart for Japanese yen. I was looking to be bearish as we were really above that 2 p.m. opening price as well as the midnight opening price. And I always talk about how if you're above two opening prices or below two opening prices, that's going to help you dictate whether you're in a deep discount or deep premium, giving you a further edge as to whether you are trading in a particular direction correctly or incorrectly. And in terms of the daily levels that I was looking for, you have these three up close candles here. We're engulfed by this one down close candle. That's going to be your daily order block. In addition, you have the consequent encroachment of this wick. We're going to be treating that as a fair value gap. I always talk about how in proper context, you can use wicks as gaps. So ICT also talks about this as well. If you frame it properly, you can utilize this as a potential PD array as well. And here we are on the 1 hour chart. And as you can see here, look at the wick respect the consequent encroachment of that daily PD array we talked about. And we see price head over to this hourly sell side. I was looking at this BISI right here as a potential main draw. But the final terminus would be this hourly sell side liquidity. And as I mentioned earlier, remember we have this midnight opening price and that 2 p.m. opening price. Look at how we trade really above it. And that's showing me that really the market makers are trying to build in a deep premium to then send price lower. And jumping down into the 1 minute in terms of how you could have framed a setup going into this day. So right away, what we see is price trade up. It's building in itself a deep premium. Remember, we're getting above that midnight opening price. And again, these FOMC situations, you can really treat them the same way as you would with equities open. You can almost imagine this being that 9:30 a.m. open. You wait those first 30 minutes, and that's why I have down here in the green box below. From 2:30 to 3:30 is where you're going to be really framing that setup. Anything before that is just all going to be manipulation. So we see buy stops are going to be right above here and right above here. We see price build in a deep premium, taking buy stops, right? We then see price tap into that consequent encroachment that we talked about earlier. We displace lower. You have a fair value gap right in here and coupled with an inverted fair value gap. So I always talk about how if you have multiple PD arrays at once, that's going to give you higher confidence going into that trading day. And look at how price is respecting the consequent encroachment of that. Specifically, look at the bodies. And then we see price trade lower. So this stays open as your breakaway gaps. Again, if price is bearish and you're right here already, you don't want to see this get traded back into, as this is going to show you that you're having bearish order flow. We then see price trade lower, displacing down here, creating another fair value gap. In addition, you have again another inverted fair value gap. So you draw both of them out. And again, I always talk about how you can use wicks as gaps. If you draw out the 50% of this gap, look at how price completely respects the consequent encroachment of it. And then we see price trade lower. We then see another breakaway gap. We see price trade up. Again, trading into the 50% of these wicks right in here. And then we see price displace lower. So again, you don't want to see, if you're bearish, you want to see this stay respected because you have a lot of heaviness in this candle. So you're combining this PD array right here with this breakaway gap up here, and look at how price is respecting that consequent encroachment. And then we displace lower once more, trading back up into this volume imbalance right here, as you can see with these two candles. And then we see price break lower. We have another bearish order block right in here, displacement, a lot of heaviness in this candle. And once again, in particular situations, that wick is going to act as your bearish PD array. In this case, if you draw this wick out, look at how price respects that consequent encroachment of this wick. We trade lower. Again, same thing, it repeats. Where you don't have gaps, you can use the wicks as gaps in the proper context. You draw out that consequent encroachment. Again, look at how price is respecting that consequent encroachment, and then we trade lower. So already here in this price action, we already have the final hour macro starting. We see price trade back up into a deep retracement into this SIBI right in here. But look at how price is respecting the consequent encroachment of it, completely respecting that. Look at the bodies, how they don't want to go above. And then we see price trade lower. And then the next thing we have is going to be this volume imbalance in here. If you draw that out, look at how price also respects that volume imbalance. And then we finally reach that final target right at 350. So if you combine time and price, And again, like I said, you wait those first 30 minutes, let the market do its thing, because Powell's also going to talk at 2:30. So it's better to just wait, let the market do its manipulation run, and then you can distribute in the proper direction that you're looking for. But again, you're also combining it being above the 2 p.m. opening price and above the midnight opening price as well. And here we are on the DXY here on the daily chart. And I was mainly looking to be bearish, as I said before, with these lows down here. But again, it looks like we took the equal lows and tapped into a daily inverted fair value gap. So I'm going to show you guys right here. This is your daily inverted fair value gap. You draw that out. And as we can see here, price respects the consequent encroachment of it, with my main target being this new week opening gap. And again, here's that 2 p.m. opening price. And again, here's also midnight opening price. DXY is building in a really, really deep discount. And you also have this shorter term draw right in here. You have a fair value gap here. We see price trade up into it, respect it again. And then we see price finally head up higher to that new week opening gap. You could also say in this case that these are also going to be equal highs as well for a particular main draw that you were looking for. Now, I was also looking at these equal lows here. We see price take sell stops, right? We have the equal high draw, and then we displace up higher in a deep discount. That's the biggest thing. So again, it's combining both the divergences with premium and discount PD arrays. That's going to allow you to get better analysis going in for the day. And like I said, if you are really not liking what you're seeing on NASDAQ or any other kind of US equity, head over to the currencies. They're going to be a lot cleaner, a lot better, especially the yen dollar. And you'll see maybe some better price action there. So I hope you guys found this market review insightful. Please be sure to comment down below, like and subscribe, and I'll catch you guys in the next market review. Peace.